Financials doing well, energy doing well, as you pointed out. But one area that is not doing well are semis. They got smacked down. The SMH semiconductor ETF down nearly 4% this year. That means 5 days this year. But the chart master sees some big opportunity when the chips are down. Let's get to Carter Worth of Worth Charting. Carter, talk us through it.
Tyler, how are you?
I'm great.
So, you know, it's an interesting thing. There's a big debate going on whether you abandon growth stocks and embrace cyclicals, and that's always a debate that goes on. In fact, the past 3 years, there's been this thought that you grab cyclicals, and every time one's tried, it's not worked. Let's look at a couple charts. I think semis are going to do very well this year. First is a long-term chart. Now, this is a ratio chart. It's not looking at the SOX index or the S&P. It's looking at the relative performance of the SOX to the S&P. And you'll see that circle, that's the dot-com peak. And it shows just in 1 year how steep that relative performance was, whereas this has taken 10 years, and we're still not back there, which is to say, are semis ultimately going to make a new relative high to the S&P? I think so. And for those who care about valuation, at 28 times versus a market multiple of 26, I think that's a good deal. Next chart. Let's look at the SMH. That's the Van Eck ETF that captures semis. And there are no lines on that chart. As you can see, no judgments, no arrows. So the next chart, let's put some lines in. What this is the SMH, and that is a mathematically perfect 45-degree. That's the past year and a half, 18 months, and we're simply down to the bottom of that, the midpoint of the channel. Could we go to the bottom? Okay, but the point is this is up and to the right, and it's just rested for the better part of 8, 9, 10 weeks. That's a good thing, not a bad thing. Final chart, this is a ratio chart again, and this is, and we just broke out to new highs, this is the relative performance of the ETF, SMH, to the QQQ. And I think that's very important. So stocks were up 41% last year, almost double the S&P. And they, for the first time in the history of the Philadelphia Semiconductor Index, outperformed the S&P for 3 years in a row. Do they do it again? My hunch is yes.
Nadine, what do you think there? There's a pretty compelling argument there as you see those semiconductors beating the QQQs finally after running in that, as Carter describes it, channel for quite some time.
Tyler, I agree with Carter there because number one, you've got the secular growth story. Number two, this week, like I mentioned, was more of a trading algorithm repositioning. Decline in tech and semis versus a fundamental story. No one's saying that semis are broke. It's more of a trading, a rates play, people repositioning. And so there's opportunities here. So I agree on the SMH. The price is about $296.89. Our trading range has a low end of $296.38, so just under that, and a top end of $316.25. So you'd get 6.5% upside to minus 0.2% downside. So that's right there to be able to buy. And I think you're going to start getting more to fundamental trading stories once earnings season goes through. In fact, this week I bought a little bit of Taiwan Semi.
Even I can do the math you just described, Nadine. Even I can do that math. $6 up, $2 down. Okay, I got it.